All right, folks, it is 5:05, and so we're going to go ahead and get started. This is the Colorado Clean Energy Fund and C-PACE webinar that's being hosted by San Miguel County Eco Action Partners in collaboration with the town of Mountain Village, Solar United Neighbors, and Solar Energy International, which is where I come in. My name is Ellen Ross, and I manage the Solar Forward program for Solar Energy International. And I'm going to do a little bit of Zoom logistics and go over what we're going to have in the webinar today. And then I'm going to turn it over to Tracy Phillips with Cpace. All right, so as far as Zoom logistics, you can hover over that bar at the bottom and you'll be able to have these options pop up. Because it is a webinar format, you cannot turn on your video or your microphone. However, you can ask questions in the Q&A box, or you can raise your hand if you need assistance with some of your technical aspects. You are also welcome to use the chat function if you want to talk to other folks in the webinar. And just as a reminder, this webinar is being recorded. So if you do raise your hand or afterwards ask me to unmute you in the Q&A, your voice will be recorded. Otherwise, it's just going to be me and the other panelists that will be on video and have our mics on. All right. So just a little bit about my organization, Solar Energy International. We are based out of Paonia, and we've been around for about 30 years now, as well as having our Paonia campus. We also have a campus in Oman in the Middle East, as well as Costa Rica for our South America or our Latin America program, excuse me. We've trained over 82,000 solar professionals, and that amounts to about 10% of the world's solar workforce. And we actually have a goal to train 275,000 folks in the next few years to really move the renewable energy transition along and mitigate greenhouse gas emissions. If you or someone you know is interested in learning more about solar or getting solar training, that is our phone number at the top, as well as our website. Or you're always welcome to email me if you want some more information about that. So for the contents of today's webinar, we are going to be talking about financing available in Colorado for energy efficiency and renewable energy for homes and businesses. So Tracy is going to kick us off by talking about the Commercial Property Assessed Clean Energy Program in Colorado. You can finance up to 100% of energy efficiency, renewable energy, and water conservation, including for agricultural buildings. And then we'll get to hear from Steve Ella, who was kind enough to share a little bit of his time as well, and share his experience with the C-PACE process on his family farm. And then Paul Scharfenberger is going to share about Colorado's first green bank, the Colorado Clean Energy Fund, and talk about how the Colorado Clean Energy Fund helps finance smaller C-PACE projects, as well as residential solar energy systems, which is especially relevant if you are interested in the Uncompahgre Solar Co-op. And then I believe Burton is on the line to discuss Eco Action Partners rebates in San Miguel County. Those are, we have the SMPA efficiency rebates. They have CARE program rebates for income qualified community members. And we also are promoting the county's solar co-op rebate of $500 to the first 10 deed restricted community members to sign a contract with the co-op. And then Fortunately, we have Sarah Solomon today with us from Solar United Neighbors, and she's going to discuss the Uncompahgre Solar Co-op and provide any more information and answer questions if y'all have questions about the Solar Co-op. All right. And with that, I'm going to stop screen sharing. If Tracy wants to hop on with his presentation.
All right. Can you hear me okay, Ellen?
Sure can.
All right. And you see my screen?
Yes.
All right. So I'll jump into it. So yeah, thanks for having me today. I appreciate it. My name is Tracy Phillips. For those of you that don't know me, I'm the director of the Commercial Property Assessed Clean Energy Program, or C-PACE for short. And I'm going to give you sort of a quick overview of what the program is and how it works. So like Ellen was just describing, the program was launched in 2016. It's a statewide financing program, so it covers the entire state. And the program was designed to help finance energy efficiency, renewable energy, and water conservation projects for existing buildings. You can also finance portions of efficient new construction projects as well. So I'll touch on all that in just a minute. The program is a statewide program, but each county has to voluntarily opt in before we can begin financing projects in that county. And I'll talk more about that as well. San Miguel County is definitely a participating county, so we're ready to go there. The other thing I'll mention is that the program and the projects are all financed through private capital. So there's no state money or federal money or grants or bonds or anything like that that's financing either the program or the projects. It's all private capital. And the program is overseen by something called the New Energy Improvement District, or NEID for short. So that's the statewide district that was established to enable this form of financing in Colorado. What is C-PACE, or Property Assessed Clean Energy? So the financing, when it was first conceived, the idea was to give building owners a different way of financing these types of improvement projects. So it was designed to be different than traditional financing, traditional loans. And there's really three things that make it different, markedly different. So the first is, as Ellen mentioned, it's 100% financing. So it'll cover all the hard costs and all the soft costs associated with an improvement project. The second is it's long-term financing. So you can do a finance term up to 25 years. So that right there is very different. A traditional loan might expect you to come 20% out of pocket and you finance it over 5 years. This is nothing out of pocket and you can finance it up to 25 years. And the third piece, and this is what really makes it unique, it's an assessment that gets placed on the property. So the idea there is a lot of building owners may be reluctant to do an improvement project on their building. Solar is a great example, right? Solar may have a longer payback period. Let's say it takes 10 years for solar to pay for itself, and where the owner has seen a positive cash flow after that point. So an owner may say, well, I don't know if I'm going to be in the building for 10 years. I may sell this building 5 or 7 years down the road. So the idea with C-PACE, as well as an assessment on the property, it stays with the property. So an owner has the ability, if they sell their building down the road, to hand off the future payment obligation to the next owner. So in other words, they enjoy the savings for 7 years, they make the payments for 7 years on that solar PV system. And then when they sell it, they're handing off the savings, so to speak, and they're also able to hand off the payments. As an assessment too, the financing is usually primarily underwritten by the building itself. So it's usually non-recourse. There's no personal guarantees. It's the building that's essentially the main component securing the financing. A lot of projects are designed that the energy savings will outweigh the payments each year. And C-PACE programs in other parts of the country, they actually require this. A lot of them will say, okay, you have to have the energy savings outweigh the payments So you have a positive cash flow over the term. In Colorado, I want to mention we don't have that requirement, which means you can do improvement projects that may save energy on your building, but the savings may take a long time to recoup that investment. So like a roof replacement is an example I always like to use. A roof costs a lot compared to the savings that you may get from the improved insulation or reflective coating. So it's going to save you energy, but it may take 200 years, let's say, before the savings actually pay for that roof. So the owner is enjoying the energy savings, but that's not the main reason they're doing it, right? They need a new roof is a big part of it. So in many programs across the country, you wouldn't be able to finance a project like that by itself, but in Colorado, you can. We've got plenty of projects like that. What's eligible? Well, the C in C-PACE stands for commercial. So any commercial, industrial, or agricultural building is eligible for financing. That includes nonprofits. People always say to me, well, they don't pay property taxes, but because that's how it's billed, right? As an assessment on the property, you make your payment with your property tax bill. So how would this work for a nonprofit? Well, nonprofits can have assessments placed on them just like everybody else. So in fact, it works seamlessly with nonprofits. And we've had quite a few nonprofits use C-PACE financing. In fact, they tend not to have a lot of money for these types of capital improvement projects. So C-PACE can be a great fit for them. And multifamily, if it's 5 or more units, it's considered commercial multifamily. So this isn't, C-PACE isn't available for residential, but if it's 5 or more units, like an apartment complex, then it's eligible for financing. And anything that reduces your utility bill is eligible for financing. So any improvement that you can think of, replacing the heating and cooling equipment, new lighting. I mentioned, envelope improvements like a new roof or new windows, new doors, any renewable energy. So solar PV is a big one that the program does, but it could really be any renewable energy improvement you can think of. And EV charging stations are also eligible. They're the one oddball. They don't actually reduce your utility bill, right? They actually use energy, but they're in the spirit of what the program's trying to do. So those are eligible. And anything related to the improvement is eligible for financing. So any of the soft costs, if you have to do an energy audit or any kind of engineering design work or architectural work, or even hard costs related to the improvement. So let's say you're putting solar on your roof and you have to do a structural upgrade. That structural upgrade cost is considered related to the solar, and so it's eligible. Or I've seen, we've had carports with solar on top of them. So the carports are considered related to the solar, and those costs are eligible. Or maybe you have to update the electrical to support the new solar PV system. Those electrical upgrade costs are eligible for financing. So it's truly meant to be 100% financing. To touch briefly on new construction, so that's for existing buildings. With new construction, a project can receive between 15 and 20% of the total construction cost through C-PACE, as long as they either meet or exceed the 2015 energy code. That's the IECC. So if the building is being built to at least the 2015 energy code, regardless of what the jurisdiction might require, right? They may still be on 2012 or 2009, but if the developer says, I'm going to volunteer and build to the 2015 energy code, then they're eligible for 15% of the construction cost through C-PACE. Many jurisdictions require that these days. So quite frankly, a lot of projects are almost automatically eligible for 15% financing. If you demonstrate that your design is going to be at least 5% better than the 2015 energy code in terms of energy performance, then the project's eligible for up to 20% of the total construction cost through C-PACE. Just to take a quick step back and give you a sense, so we didn't create C-PACE financing in Colorado. It actually launched a little over a decade ago. And so since then, there are 24 states with C-PACE programs across the country. Well over $2 billion has been financed across the country. So at this point, C-PACE is well-established form of financing. In terms of Colorado specifically, I mentioned each county has to opt in before we can begin financing projects in that county. And we're actually up to 39 counties that are participating. You can see San Miguel County is on board. Recently, we had Mesa County, which is your neighbor to the north, Grand Junction. They recently came on board with C-PACE. And just a few weeks ago, El Paso County, which is Colorado Springs, just joined the program as well. So, so I know a lot of you folks are from San Miguel specifically, but you know, if you work or have properties in other parts of the state, this is where it's available. To give you an idea of the potential for these types of energy savings projects, I'd like to refer to this report by Rocky Mountain Institute. You know, they're based in Boulder. They did a study that basically said buildings on average can save 15% or more on their utility costs just by sort of tuning up the building, right? Doing what are known as low and no cost improvements. But if you start looking at capital improvements, you can actually reduce your utility bill on average by 35% or more. And that's where C-PACE comes in, right? To help you finance those capital improvements. These types of projects result in a net operating income, or NOI, increase between 2.4 and 5.6%. So that can be very compelling to a building owner. The other advantage of these projects, one of the advantages, is the property value will go up. And this report indicated that on average, as a result of these types of projects, the value of your property can go up between $5 and $11 a square foot. So, so it could be pretty substantial if that's, you know, something you're interested in. One thing I like to mention as an assessment on the property, just like any other assessment, it takes priority ahead of the mortgage. So if there is a mortgage on the building, and most buildings have a mortgage, then the mortgage holder needs to provide consent. They essentially have to agree to allow the C-PACE assessment to be placed on the property. And so you might ask yourself, well, why would a mortgage holder agree to that? The bottom half of my slide is sort of the talk track that we use when we talk to the banks. So there are advantages, right, to the bank for these types of projects. One is, I mentioned, the net operating income is going to go up as a result of this project. And banks like that. They like NOIs going up. The value of the property is going to go up as a result of this project. Again, that's the bank's collateral. So they really appreciate that. And the key, not to go into the weeds too much, but in a default scenario, C-PACE does not accelerate, meaning the C-PACE assessment does not come due. It's only any payments and arrears that need to be made up. The assessment continues with the property, even in a default scenario. So what the bank is actually subordinating to is, you know, the potential in a default of 1 or 2 years worth of payments, not the entire C-PACE amount. So usually when mortgage holders hear that, they're willing to provide consent. We've actually had 40 different banks provide consent across the state, many of them now multiple times. So, so these banks in general are getting much more comfortable with C-PACE financing and are open to the discussion of consent. Where does the money come from? Well, it's in what we call an open source funding model, which means anybody can finance C-PACE projects in Colorado. They just have to get registered with the program. And I'll show you the lenders that we have. But when they look at a project, some of the main things they look at in terms of their underwriting, one is the loan to value. So that's what's the mortgage compared to the value of the property, right? How much debt is on the property? And they usually like to see a property with a loan to value of 80% or less. It's not a rule, but that's what they usually like to see. So if I have a building worth $1 million and a mortgage of $600,000, that's a 60% loan to value. So that's a good candidate for C-PACE. The same with how much money can a building owner expect to get through C-PACE? And it's usually around 20 to 30% of the building's value. So again, if I have $1 million building, you could expect around $200,000 to $300,000 worth of financing available through C-PACE. It's not a rule, but that's what they usually will provide. And here's our list of capital providers. So we actually have 45 different banks and credit unions and other PACE specialty providers that finance the projects within the state. So the nice thing about having this big group of capital providers, and you're going to hear from one of them, right? Paul Scharfenberger and the Clean Energy Fund, they're one of the lenders in the program. They do a lot more than just C-PACE. He'll talk about that, but But so the nice thing is, with such a big group, they, number one, they compete with each other, which helps bring their interest rates down and their fees down, which is great for owners and developers. The other is they all like to finance different types of projects. So some of them, may like smaller projects, some of them larger projects, some of them may be more interested in projects in large cities, and others more in rural communities. So having like such a big group is really advantageous to the borrowers. So I got a few more slides. I'll talk about what the program's done to date. So far we've financed 101 projects here in Colorado, just under $159 million in financing. In terms of project sizes, they have ranged. The smallest has been around $60,000. The largest we've done in Colorado is $29.7 million. I'm going to show you that project in a second. If you're curious, the biggest project in the country was a recent one. It was a $103 million C-PACE project in San Francisco. So the sky's the limit. You can't have a project too big for C-PACE. Now I'm going to just show you a few case studies. So here's Steve Ella. He'll be talking about his project in just a minute, so I won't steal his thunder, but I will just say Steve was one of our first projects on the Western Slope and one of our first agricultural projects. So he'll tell you more about his project in a few minutes here. One of his neighbors, this is a winery. Once he heard about Steve's project, they decided to use C-PACE as well. So they used $64,000 in C-PACE funds to finance an 18.2 kilowatt solar PV system, a ground mount system. Here's another example of sort of a smaller project, at least in the C-PACE world. This was a laundromat. Sorry, not a laundromat, a dry cleaners that used $126,000 in C-PACE funds to install a 46 kilowatt solar PV system. They did a mix. They did some of it on the roof and the rest of it as a ground mount system. I'll point out too that, any of the tax credits that you may get from solar, or any other incentives, whether it's a local incentive or a utility incentive, those all go to the owner just like they normally would. C-PACE is just another way of financing your project, so it doesn't inhibit any of that. Here's another example of a project. This was a building that they needed a new roof and a new rooftop unit, the heating and cooling unit. And so that was their main drive to come to C-PACE, was to get those two critical items replaced. But what they did is what a lot of owners will do, is they said, well, what else is on our bucket list, or what else is on our wish list? Because now is maybe a good time to get everything done at once. So that's what they did. They said, well, we're replacing the roof. This is a great time to install solar. So they included a 16 kilowatt solar PV system. They also said, we always wanted to have EV charging stations. And so they included that as well. You can see on the left there, the 3 EV charging stations that they installed. So they took kind of a negative, right? I need to fix my roof and my HVAC unit, and turned it into a real positive to get all these other things done as well. We've also seen a lot of gut rehab projects. So this is an example. This was a big box retail that had sat vacant for years, and the developer bought it and turned it into this recreational and fitness facility, this high-end facility. They used about $1.7 million in C-PACE financing to replace all the windows and skylights and HVAC equipment, and replace all the lighting. I mentioned nonprofits. I wanted to show you a couple of those. This is the Forney Museum in Denver. So they used $62,000 in C-PACE to replace all their lights. So for anybody that's interested, if you're a building owner or a developer, or you're a contractor and you're going to be talking to an owner or developer about C-PACE, the first step to get the financing process started is to submit this, what we call a pre-qualification submission form. And if you look on the bottom right, that's the link there. If you go to the resources section of the website, you can download this form. You send this in to us, and then we'll pre-screen the building, and then we'll reach out to set up a kickoff call and get the financing process started with you. So there's my contact information, and I'll share my slides with Ellen, so anybody that wants these slides can just reach out to Ellen, and she'll be able to send them to you. So that's my piece. Thanks.
All right, I don't see any questions in the Q&A or chat. So let's go ahead and hear from Steve Ella. Steve, if you don't mind sharing a little bit about your experience with the C-PACE process for your farm.
Sure. So we are about a 9,900 acre farm in Hotchkiss, outside of Grand Junction here, fourth generation organic farm. And we had already had a 25 kilowatt system that we put in ourselves in 2014. But that, our energy use on the farm, especially from fruit coolers, was significantly more than that. And so we were very interested in doubling that system. In fact, we would have liked to have done a little bit more, but we're with Delta Montrose Electric Association and on a small commercial account, and they capped us at that 50 for whatever reasons they have. So we use C-PACE to put in a second 25 kilowatt system. That probably is pretty close to 80, maybe 85% of our energy needs. And, realistically, we self-financed the previous system, but we didn't have the cash in hand to finance the second one. And so that was about the time C-PACE came into Delta County. We had a solar installer that we'd worked with on the first system that we really liked, and they were interested in helping get the C-PACE program into this area. So we worked in partnership to get everything filled out. And it worked really well for us. I mean, at this point, we pay our C-PACE loan off through our property taxes, and the program, we've come in right on spec. If you look at the projected power generation that we've had and compared to what we're actually producing, it's just right on the money. So we're projecting a 8-year payback period. Honestly, if as a fruit grower, if I could have an 8-year payback period on anything, I should put the whole farm under solar and forget about growing trees. But but it's been a great system, and the financing has worked out really well. I like putting it on the property tax because if we did choose to sell the farm, we can point to this 50 kilowatt system of energy production and yet not have to try and raise the sales price to reflect that. It's just going to show up on a new owner's property tax. I'm not saying that we're looking to sell the farm, but that's a good side effect. We were, as Tracy mentioned, we were one of the first C-PACE loans in this area, and one of the early agricultural ones. So that created some questions. One of the main ones is, like any farm, our residential house is part of the farm. Our whole farm is an LLC that owns all the farm and the house, and that question of, are we benefiting a residence versus the farm, came up. Fortunately, our house is on a separate electric meter from the rest of the farm, so that was fairly easy to say. We have two separate systems here. It took a little bit of paperwork, but everything does. And if we had gone through a traditional bank, we would have had to do that same paperwork. And I think what I really appreciated was with C-PACE, as Tracy mentioned, there, all the banks that are part of it, is they farmed our system out to all those banks. So rather than me having to go out and contact each individual bank and find out what their terms were, et cetera, they put it out for bid. And I think we had 3 banks that submitted bids on it. We are, comparatively, $60,000 system is very small. And so for some of the banks, that was just smaller than they wanted to finance. They were looking for bigger projects. I think, if I remember right, one of the banks was in Kansas, 2 were in Colorado. The one we chose is actually Region 9 Economic Development Bank, so down in Cortez. They had one of the very competitive deal. Another bank was similar, but we just, since we're a small Western Colorado farm, it made sense to go with a Western Colorado bank. And it was kind of a new foray for them into the whole C-PACE process. So it felt like kind of a win-win situation for both of us to work on this, and they've been great to work with as well. We just pay our property tax. It goes right into the county. They pass it on to the bank, and it's pretty seamless. So with that, I guess, do you want me to cover anything else? I mean, it's a pretty basic overview, except it's it really helped us get a solar system on the farm that saves us a significant amount of money each year.
Yeah, that seems like a pretty good overview. Thank you, Steve, and also thank you for mentioning the difference between like the residence and the commercial meters that y'all fortunately already had at your home. I know that is an issue for some ag producers looking to do C-PACE. So thank you for mentioning that. And I don't see any specific questions. I am glad you're not tearing up the trees to put in solar yet, but maybe if agrivoltaics can come along far enough and we can build them high enough on like rotating pivots, then sorry, I'm forgetting the name of like that piece of machinery, but maybe then. But I'm glad you're keeping the trees.
Well, we are too, but I think that the return on investment is awesome, and for a system that should last 20 years or so, having an 8-year payback is I'm not going to complain about that. So.
Excellent. Well, thank you so much for sharing. I appreciate it. And if anybody thinks of any questions, you can throw them in the Q&A or go ahead and chat about it. And next up, we have Paul Scharfenberger, the director of the Colorado Clean Energy Fund. Thank you, Paul, for joining us. Paul is actually local to y'all's region over in Ouray County. And Paul, I'll let you take it from here.
Great. Thanks so much, Ellen. Really appreciate it. And hi, everyone. It's nice to be here with you all. So as Ellen mentioned, my name is Paul Scharfenberger. I'm the CEO of the Colorado Clean Energy Fund. And just to start, we're a nonprofit mission-based investment fund that was created to fill what we call clean energy finance gaps across the state. So what are the types of projects that typically have a hard time finding capital? That's our bread and butter. We're focused on fixing those problems. So I'm going to start by just giving a quick background as to how we came to be, and then I'll move forward into really our focus areas, some of those gaps that we're focused on addressing, and then I'll spend quite a bit of time on the loan products that we've developed and are offering to market participants today. So just real quick on our background. So we were actually created in partnership with the state of Colorado. So dating back to really about 2016, the Colorado Energy Office was recognizing that the state had done a lot of good work in partnership with private lenders to launch programs like C-PACE. There's also a statewide residential energy efficiency and solar loan program called the Residential Energy Upgrade Loan Program, the Renew Loan Program. So the state had done a good job working with partners to launch some products, but they were noticing that there were still quite a few gaps in the market. A good example would be with C-PACE, although we heard from Steve Ellis, such a fantastic project, and he was able to find financing for a relatively small project. That's not always the case. A lot of lenders prefer larger projects that they view to be more economical. In the residential sector, the Renew Loan Program is, again, fantastic, and I would encourage everybody to look at that program. But it employs a very standard underwriting practice, meaning if you don't have a high FICO score and you maybe have a suboptimal debt to income ratio, you'll be excluded from the program. And so those are what we call gaps, and the state wanted to fill those. They wanted access to capital for low and moderate income households, for small and rural and medium businesses. And so around 2017, the state connected with an entity called the Coalition for Green Capital and partnered with the Department of Energy to essentially try to identify all of these gaps and then propose solutions for filling them. This was about an 18-month research effort that ultimately recommended to the state that it create a nonprofit mission-based investment fund. And that's what the Colorado Clean Energy Fund is. It's actually December of 2018, former Governor Hickenlooper announced the creation and incorporation of the Colorado Clean Energy Fund to act as the state's green bank. I won't get too much into what green banks are, but I will say there are now over 20 green banks across the country. We all take a little bit different forms. Some are state entities, some are quasi-public, some are nonprofits, but we all essentially try to do the same thing, which is fill these pressing needs, these finance gaps that we're seeing across the country. I came on board full-time in September of 2019, and since that time, I've really worked to do four main things: secure our operating funding, which we've completed; establish our governance structure, which is essentially our board of directors; develop our business plan and our inaugural loan products; and ultimately raise investment capital to support those loan products. I'm really happy to say that we've completed each of these efforts. And on this last one, raising investment capital, Senate Bill 230 passed last legislative session, which directed $30 million to our entity. That really allowed us to launch our operations in earnest. So really quickly, I just want to make four primary points about this slide. For one, we use financial tools. And it's a various mix of tools, but we don't provide grants, we don't provide rebates, we don't provide subsidies. That said, anytime we work with a potential borrower, our mission, again, is to try to buy down the cost of financing. And so we help our borrowers identify other grants, rebates, and subsidies. But at the end of the day, our institution only provides the financial tools. We blend various forms of capital. I mentioned we receive money from the state government. We anticipate receiving money from the federal government. And we're also raising capital through philanthropic organizations, as well as market rate private equity. And what this allows us to do is blend cheap capital with some more expensive capital and still be able to offer really attractive rates to our borrowers. So we're blending different forms of capital, and that's really what allows us to offer attractive interest rates. Again, our focus is on filling gaps. So we're not in the market trying to compete with already existing efforts. A good example is the Renew Loan Program. Our residential lending efforts are primarily going to be focused on the folks that can't participate in that program. And that's typically your low and moderate income households. Similarly, in the C-PACE realm or the commercial building sector, we're not focused on big projects. We're focused on the small projects that typically have a hard time getting financed. So really focus on filling those gaps. And the last thing is we try to catalyze greater overall investment beyond the dollars that we manage. And what this means is that we do our best to work with other private lenders to unlock their capital. $30 million for us is a great start, but there are banks and credit unions and private equity players that have billions of dollars of assets under management. And we need to unlock that capital to support energy efficiency and clean energy projects. And so I'll get into some of the tools that we use to do exactly that. But first, let's talk about the gaps that I keep referencing, and then we'll get into some of the leveraging tools that we use to fill them. So the gaps that we see in Colorado, these are the projects that typically have a hard time getting financed, small. Really, again, most lenders, just to be frank, don't make much money off of these projects. And so they view them as unattractive. A lot of smaller projects also are challenged credit-wise, and we'll get to this in a little bit, but small is difficult. Rural can also be difficult, and it's a little counterintuitive, but a lot of lenders, banks, credit unions like to have a footprint in the area that they're lending to. And so this can be challenging. If a bank doesn't have a branch anywhere near a project, say in Cortez or in the southwestern portion of the state, they're typically not going to lend to it. Long tenor financing we see as a huge need. We pay very low electricity rates in Colorado. And so some projects, if you're talking about doing a very deep retrofit of a building or solar or whatever it may be, some of these paybacks can be in excess of 10 years. And most traditional financing terms are 5 to 7 years. And so that doesn't make a ton of financial sense to take on a 5-year loan when your financial payback is 10 years. That means you're losing money throughout that loan term. So we focus on extending those tenors. All of our loan products to date are at a minimum 15 years and above. And that's really how we produce positive annual cash flows. We marry the savings with the loan term. Medium credit quality financing is probably the biggest barrier we see. With small and medium businesses, a lot of them have thin balance sheets. And when you have a thin balance sheet, you're going to be viewed as risky by a traditional lender. Similarly, when we're talking about homeowners or residents, if you have maybe a suboptimal FICO score or bad debt to income ratio, you're going to have a hard time getting a loan to pursue even basic energy efficiency upgrades. And most of these folks don't have the capital to self-finance these projects. So it's a huge issue. And it's part of the reason we were created. Our underwriting terms are far more flexible than we see in traditional commercial lenders. And it's again, because we're a mission-based fund. We have the flexibility to take on a little bit more risk. There's a few more examples here, but for the interest of time, I'll keep moving. And so before I mentioned, our goal is to catalyze greater overall investment and fill gaps. And so how do we do this? It's not just direct loans. We will provide direct loans, and we do, but there's a lot of different tools that we can use. So say there's a perceived project risk. It's a small business, maybe relatively new. They have a thin balance sheet, not a ton of credit history. Well, maybe a bank wants to provide a loan to them, but they're just a little bit concerned about the risk. We can work with that bank and provide what's called a credit enhancement. We could capitalize a loan loss reserve in which, if there is a default, we provide the bank a portion of the loss. And it's a risk mitigation solution that we can offer. And in doing so, we can unlock some capital from private lenders. Now, if that doesn't get us where we need to be, we can also just step in and provide the loan directly. Inefficiencies of scale, so small projects. How can we help get private sector lenders to focus on these projects? Well, one tool that we've developed is aggregation and warehousing, and we're actually doing this with C-PACE. We've essentially said, look, we get it. You like the $1 million projects, bank ABC. Well, what if we bundled 10 $100,000 projects? Would you purchase a $1 million portfolio from us? And we have a lot of interest in this model and quite a few partners that we're engaging with to set up exactly that structure. So it goes to show you, even though maybe a small project isn't as attractive to them, we can still get them to participate in a small project. We just have to play an intermediary role and then sell portfolios to them. In doing so, we recapitalize our balance sheet. We do it again and again. We can have a really big impact with a fairly modest amount of capital ourselves. And a lot of other tools we can provide here: co-investments, subordinated investments, where we're in a first loss position. We can provide loan guarantees. So we have a lot of flexibility in how we can position our capital to, again, try to unlock some of the vast sums of capital that are sitting on the sidelines right now. So what are some of the commercial loan products that we're offering today? The next two slides are going to be commercial loan products first, and then I'll get into the residential loan products that we have available and the ones that we are developing. So these three are available today. The first one is a bridge loan. And actually, this was developed with a focus on our agricultural sector. USDA offers various grant programs to support energy projects within the agricultural sector. Colorado Department of Agriculture offers grant programs as well. But we're finding there's a challenge with those programs. A lot of times the project has to be implemented and then certified before the grant proceeds are ever distributed. And so we're asking our agricultural producers to float that expense until the grants are provided. That's an issue. And so we've stepped up and we've created this bridge loan. We've essentially said, look, we'll provide you a loan, low interest rates for a short term to get you to the point where the grant proceeds come in, then you can pay us back, and we call it good. A few things to note: we're focused on smaller loans here, less than 500,000. Loan terms typically less than 12 months. One thing I will say is this bridge, say there's still a gap between the project costs and the grant amount, we can convert this bridge loan into a longer term loan to finance that delta. So just one thing to note there. The rate I say here is not to exceed 5.99%. We've done a few of these and most of them were right around 4%. So this is an absolute worst case scenario. As long as the borrower's in a good financial position, the rates can be quite low. And just for the audience sake, this is a little counterintuitive, but bridge loans, short-term loans that banks and credit unions typically offer, typically at very high interest rates. And it's because it's such a short loan term that the bank doesn't make any money off of it. So it's typical that these have higher interest rates than your longer term loans. The fact that we're doing this in many cases at 4% is actually in a very attractive rate for this type of lending. Our fee structures are low, put 1 to 2% origination fee here. We're averaging about 1% on most projects. Our security can either be the pledge of equipment or the pledge of the grant itself that's coming in. So it can be really flexible. We're not taking a position on the property. And the time to close is very short. It's less than 15 business days. But this could theoretically apply to other sectors outside of the agricultural sector. But right now we're actually working on, it's exciting, more than 10 to 15 projects across the state look like they're going to leverage this program from us. We have a standard commercial term loan. It's a 15-year term, again, focused on smaller projects. It's a rate not to exceed 4.99, but again, a pretty strong borrower could receive rates lower than this. Origination fees 1 to 2%. This product is secured via lien on the property, but it's a subordinate lien. So a pretty painless process of securing that. And then the time to close is less than or equal to 30 days. And then we are participating, as Tracy mentioned, in the C-PACE program. Again, though, focus on the gaps, and we see gaps in rural and small. And so we really want to get connected to small rural projects. C-PACE is just such a fantastic tool. I mean, you're never going to find financing terms up to 25 years. And in that respect, it's a great option to look at. We put not to exceed 5.99 here, but we're actually averaging between 4 and 5% on the projects that we're currently looking at. We haven't closed a C-PACE deal yet, but we're anxious to. As Tracy mentioned, this is a senior tax lien and the time to close is a bit long. So a few things for folks that may be interested in these products to consider. In the residential sector, we have one product available right now, and my team and I are anxiously working to create more. The first one that we've launched, and this was in partnership with the Denver Solar Co-op program, and we're going to be offering the same to the Uncompahgre Solar Co-op program, is a solar equity loan fund. We are focused again on where the gaps left by Renew, and this is typically low and moderate income. So we're typically focused on households that are 80% or less of the area median income. The amounts are less than or equal to $12,000. This is negotiable. So I don't want to say this is set in stone, but that's our standard. The term is 12 years. It's a 3% fixed rate. It's a 1% fee. It's completely unsecured loan. And the time to close is less than or equal 15 business days. I should say the security is a special offer during our pilot. Down the road, I could see us either securing the equipment as collateral or potentially taking a subordinate position in the property. But right now, we're really trying to gather information through these programs that'll inform our longer term ambitions, which are on the right here. So the products that we're working on, beyond just a solar loan fund, we want a whole home retrofit product. It could be solar, but really any other efficiency, electrification related measure could be financed through this program. And in that regard, it's essentially the Renew program, but for low and moderate income households. So that's in development right now. We're working with quite a few utilities across the state to develop on-bill repayment programs, which essentially means you pay back the loan via your utility bill. It's a lot of advantages to the structure, and we have a lot of utilities in the state. So we see this as a very compelling market opportunity. And then when we're looking at gaps, really the last gap that would remain then from our vantage point is something to help pay for emergency replacements. Your hot water heater craps out, your HVAC goes down, something that we consider to be related to health and safety, something that needs to be replaced immediately. We want to keep people from putting this stuff on their credit cards, because if you put it on your credit card and you miss a payment, you're paying 20+% interest. And particularly for lower income households, that's predatory. And we see this as a huge issue. And so we're working to develop an emergency replacement loan product. It would be same day approval, very low interest rates. We're thinking in the 2% range. Again, a product that's not going to make us any money, but something we see as a huge need in the market. And so we're working to develop that right now as well. And then quickly, I know we have limited time, so I'm going to breeze through this slide, but just for the benefit of the audience, you know, everybody thinks of loans and financing, and the first thing that comes to mind is interest rate, interest rate, interest rate. But there are a lot of other factors to consider when evaluating your options. And when we work with folks, we'll walk you through these. We'll show you different options and always push towards what's the one that's going to be most advantageous to you. But loan term is huge. Like there's two factors to consider here. If you have a long loan term, your aggregate interest is going to be higher. You're paying interest for a much longer time, but your annual cash flows may turn out and likely will turn out to be positive. Your energy savings, as you extend your loan term, your loan payments become smaller and your energy savings can outweigh them on an annual basis. And so in a lot of cases, it is more advantageous to have a longer loan term. Fees and closing costs, we see a lot of lenders out in the market with extremely high dealer fees. And a lot of times these are in small print. So always keep an eye on fees, closing costs. The time to close, depending on your situation, can be important. You know, maybe you have a few months and that's great. And that could steer you towards one loan product. Maybe you don't though, and you need to replace something quickly. So keeping an eye on the time to close is important. Security and collateral is always important to be cognizant of. What are they asking to secure the loan with? And then the underwriting terms is really an important factor to consider. Agriculture is historically been viewed as a difficult asset class to underwrite by some lenders with limited experience in this space. And so partnering with an experienced and or creative and inclusive lender is important for certain projects. And we like to view ourselves as that. So if you have any projects that are in need of capital, you're having a hard time accessing capital, we'd love to hear from you. This slide outlines our lending process, which really the main point to highlight here is built with open communication and transparency in mind. We do have a lot of touch points with our borrowers, but it's because we want the folks that we work with to understand what's happening along the way. And so I won't go into each step of this process, but they typically start with an inquiry from a borrower. We have a qualifying meeting, and we try to very quickly determine, can we make this loan or not? That doesn't mean we're going to close it immediately, but at least let you know very quickly whether there is a potential partnership here. We then work through the loan application process, providing support along the way, and then ultimately send loans to our loan committee for review. Once it's approved, we offer a term sheet. If everything looks good and you want to move forward, then we work to close the loan and fund it. And so lastly, I'll just leave off with, these are the areas that we're looking forward to developing new loan products for going forward. Electric vehicles, not only the charging infrastructure, but consumer and fleet vehicles. We're looking to develop specialized loan products to support beneficial electrification, community solar for low income. We're looking to help the cannabis sector, which are huge energy hogs and have a hard time getting capital from traditional lenders. So we have our eyes on a lot of different sectors, and we're excited to launch new loan products over the coming year. So thanks again for having me. It was great being able to outline some of the services that we're offering to Coloradans.
Excellent. Thank you so much, Paul, for going over all of that again. I feel like every time I hear it, I learn more about the financing process, as well as I'm excited to hear about that co-op loan product. We did have a question regarding if you have a program for adding solar to new construction. Is the residential product or the C-PACE product available for new construction as well?
I don't want to speak for Tracy, but you can absolutely use C-PACE to finance solar for new construction. And as a participating lender, yes, we would look at that, absolutely. With residential new construction, we are actually developing a loan product to help support the Marshall Fire rebuild efforts. That's going to really help us inform how we work with construction lenders that are building kind of the vertical structure to layer on our financing products to support the clean energy measures. So I guess my answer would be, we don't have anything that's structured today, but we'd love to hear from any folks that want to pursue this. And we'd be happy to help structure a new solution to support this. It's just something we haven't gone into yet, but we're definitely open to it.
And I'll just add, this is Tracy, to what Paul said regarding C-PACE, right? As I mentioned, C-PACE can be used for 15 to 20% of your total construction costs. Any renewable energy component of a new construction project is 100% financeable through C-PACE. So you could do 15 or 20% of the total building costs, and then 100% of any solar PV system you want to include on that project.
Excellent. Thank you both. And Paul, should they just reach out to you directly with your email address?
Yeah, that's great. And also on
Okay.
our website, we now have an intake form. It's under the Contact Us tab. So if you already have a project and you want to just submit it, that intake form is a great platform to do that. But please always feel free to reach out to me directly. I'd love to hear from you.
All right. And we are at 6:01, but I'm going to turn it over to Burton with Eco Action Partners. If you want to discuss SMPA rebates, the CARE program, or any of the other rebates offered for the solar co-op, or if you want me to go into the county's solar co-op rebates, I'm happy to do that. And then we can hear from Sarah before we wrap up.
Yeah, thank you. So just a quick thanks to Solar Energy International for having us here today. We appreciate that and welcome everybody. I'll make it short and sweet. Most of anything that I would be able to tell you today is available information-wise on our website. So that's ecoactionpartners.org. And up in the top right corner, you'll see our programs that we have, which includes the CARE program, as well as a rebates tab, which lists every rebate and gives exhaustive information on how you can qualify for those. There's a multitude of different rebates for residential clients. And we service, those rebates are available to anyone who has San Miguel Power. So you don't necessarily have to be within the county. As long as you get your energy from San Miguel Power Association, you're eligible for a rebate. So, you know, that stretches to like, I think 5 or 6 different counties region wide. And so I encourage you to go on the website, see if there's anything there that pertains to you. Energy Star appliances. The big one that we're pushing currently is electric heat pumps. We're really trying to get people in the region to switch over from air conditioning and traditional gas-powered heaters to electric heat pumps. LEDs qualify, smart thermostats, induction cooktops. There's a plethora of things that you can qualify for. And if you have any questions, I'm the rebate coordinator with SMPA through Eco Action Partners, and you can reach out to me in the Q&A and I can send you my phone number and you can call me directly and I can answer any questions that you may have about rebates. The CARE program is a Colorado affordable residential energy program, and that's actually spread throughout the state. And for Eco Action Partners, you could consider us like a subcontractor of Energy Outreach Colorado, which is the kind of our parent organization in this program, which will vet you and qualify you for the energy audit and improvements. And those are funded by San Miguel Power as well as Black Hills Energy. And there's no cost to the individual once you qualify. And the good thing about this region is that the income qualifications are actually, they're fairly high compared to other regions of the state. So, you know, you can be a one-person household with around $41,000 income and still qualify for a full audit and quite a bit of upgrades to your home, as well as be a renter And with permission from the property owner, we can also qualify you for the same program, which is pretty huge. Yeah, so that's the quick take on it. Like I said, if you want to send a question through Q&A or need my phone number to discuss further, I won't take much more of the time today, but I appreciate us being able to come on here and talk. And I can't speak intelligently about the solar co-op, so I will leave that to you, Ellen.
That's just fine. Thank you, Burton, for discussing that. Everyone, I did put the links to the CARE program for income qualified community members, as well as the SMPA rebates. And for reference, March 15th in the evening from 5 to 6 at the Telluride Library, as well as on here on Zoom again, we're doing an SMPA rebates info session. So if you want to learn more about those SMPA rebates, Burton will be available again at that time, or you can go to those links to find out more in the meantime. And now I'm going to turn it, and sorry, for San Miguel County residents, the first 10 deed restricted residents to sign contracts with the solar co-op are eligible for a $500 rebate. So I just wanted to remind everyone of that. Whether or not you're in deed restricted, tell your deed restricted friends if they're interested in going solar, or even if they're just interested in signing up for the co-op and getting a free assessment to figure out how much solar would cost on their home. All right, and now Sarah's going to explain more about the Uncompahgre Solar Co-op.
Thanks so much, Ellen. I appreciate it, and thank you for having me. My name is Sarah Solomon. I am the Colorado Program Associate at Solar United Neighbors. So if you've heard Ellen and other folks talking about the Solar Co-op, we are the nonprofit that facilitates the Solar Co-op. And right now the Uncompahgre Solar Co-op is open. And to give you an idea of what a co-op would be, we basically, we gather communities together to help inform them through educational events and through our expertise in our years in business. And we help them all come together and through economies of scale, do a group buy process, which typically members end up seeing savings for. So for example, it's like one person going to an installer and saying, hey, you know, how much would it be to get solar? Or if you take 50 of your neighbors and go to a solar installer and say, hey, if we all buy together, like how much would it be for that? So it's really nice, you know, it can be really overwhelming to learn about the process of going solar, learn about the financing as you've heard today, or some of the rebates that are available. And so being a part of the Solar Co-op just kind of allows you to be with community and to have folks there who are able to kind of walk you through it and show you the ropes. So yeah, with that being said, the co-op is still open and it's free to sign up. I will drop a link in the chat for, so you can take a look at the webpage. You are also welcome to sign up through that link. And then if you're around town, we will be in town on Thursday, March 10th, and we'll be hosting a solar happy hour at Telluride Distillery. So you're welcome to join there, stop by. First round of drinks will be on us, and you can get your questions answered and learn about all the other events and educational opportunities that we will have. And I will also put an RSVP link in the chat for that, as well as my email in case you have any further questions. But yeah, I think that about does it for me, unless anyone has any burning questions about Solar United Neighbors or about the co-op.
While y'all gather your thoughts and your questions, I'm going to go ahead and share my screen again with just like a final slide. If you need any more contact information, something on here that was not available today was Seamus Croak, who works with San Miguel County, and that's his email if you want to reach out to Seamus with any county specific rebate questions for the Uncompahgre Solar Co-op. And I did put Burton's email in the chat as well if you wanted to reach out to him about those SMPA energy efficiency rebates. So this is just a final thank you slide. Thank you everyone for joining us and taking time out of your evening schedule. I really do appreciate that you all were able to make it. And even for folks that weren't able to make it, this is recorded and I'll send it out tomorrow. That way they can catch up, or you can review it and slide back and forth through the video for parts you wanted to hear again or learn more about. And just double checking our chat. I'll give everyone a couple more minutes to review the chat if you needed any of those links before I sign us out. Okay, I'm going to close out the window. Thank you everyone so much, and we'll see you soon. Bye-bye.